Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Wednesday, November 11th, 2009. Well, the markets today have been all over the charts, folks. We've seen a move up, a move down, a move up, a move down. Overall, on relatively light volume, but believe it or not, because of the selling that's going on today, we've actually seen a little uptick in volume, which, considering today's the actual holiday, is surprising. Now, that is key because when you see downside on the markets, in general, you will see an uptick in volume. And I want to draw your attention to a couple of these candles. Look at the red candles today here on the sell-off. See the sell-off up here on the way down? Notice how they're the biggest candles of the day. Very important to recognize that. In addition, here's another little sell candle. Look at the size of that compared to the green candles on either side. And then look right here at this size of a selling candle compared to this green candle for the little bit of a bounce in that projection. All right. So again, my point being is that when there's selling volume or when there's volume out there, it happens to be selling volume. That is the way we've been seeing things so far, and it continues to be the case. The Dow right now is just up 10 points on the day. The Nasdaq is up about 5.5. The S&P 500 up 1.5 points. And the key today, folks, was what I've been referring to as the Great Wall of China, another huge call of resistance in this market. And the beauty of this market was that we actually went up to the upper ranges intraday, pierced the Great Wall of China to the upside, and then ultimately reversed. And what that is key to know is that it's a closing daily level being below the Great Wall of China at 110.34. And I alerted my chat room guys today, even put it to them in the Research Center, if you're a Research Center premium subscriber, to watch for that. And that has exactly been the case today, where you pierced it, making the weak hands, the amateurs that don't know how to read charts, think you broke out above it, and then ultimately it comes right back in and starts to sell off. And basically, the spiders are up about 15 cents, just bouncing off gap fill, which, by the way, is a great play right there. Now, a couple other things. You can see today what happened. We gapped up. Why? Well, the dollar was weaker. The dollar was weaker today to start the day, and then all of a sudden we saw the dollar catching strength and moving higher. As soon as it started to move higher, the market started to fall, and that's just been the normal scenario for this market here on out. I mean, it's been the way it has been for basically a year now, if not more, where every move up and down in the market is directly inverse to whatever the dollar does. So dollar moves up, markets move down, dollar moves down, market moves up. So again, what you can see today is that the volume started out a little bit on the lighter side for the beginning of the day, but has actually stayed relatively decent with the selling going on in this market. Today is a Veterans Day holiday, and that is, again, expected to be lighter volume. Overall, it will be overall light volume, but not as light as the previous couple days. All right, so again, keep this in mind. I want to show you on the technical basis what has been going on. Take a look at this. The market gaps up. Where does it gap up? Right to the Great Wall of China top of that wall, all right? That's 110.34. At that point, I called out a short in the chat room. Chat room short for a scalp. Where do we go? We pull back beautifully, 15 to 20 cents, all the way back to about 110. All right, so you actually talked about from 110.34 all the way back to about 110. That is, in fact, almost a 30-cent scalp or 35-cent scalp. Beautiful call right there. Why? Because you gapped up into a master level. Master level gap up short right there, and that's exactly what we were able to do. In addition, I was able to pick up another play in the chat room for a swing trade. I alerted the premium subscribers. If you're a Research Center subscriber, you have access to all that I post on the hot charts and alerts, as well as the Pro Trader watch list. You would be privy to that knowledge. And by the way, from where I picked it up very, very nicely so far on that position that I picked up. It happened to be a short ETF, which was picked up near the highs of the day today. So nice job there. Those of you in the chat room as well, making some good money there. Research Center, it was posted in the hot charts and alerts. You got it as well. So nice job there across the board. Again, you guys can join that easily join that and get access. $49.99 a month. I mean, it's the biggest no-brainer in the world to have 40-minute daily videos posted for you, technical taxes, hidden gem, Pro Trader watches, hot charts and alerts, you name it. It's out there for you, included all in that. In any case, market is again starting to tick down to gap fill again, but just notice there's your first scalp of the day that was called out. Then once you move out for that nice profit, the market does make a new high. Where does it go? It goes right to this green trend line. And why is that an important line? Because if you take the 9th, which was a couple days ago, if you take the low of the gap down and just extend that to the low here, which extends right through, check out where that goes. Look at that. It cuts right through, and where do we hit it at the high? That could be utilized as a little bit of a shorting opportunity as well. Beautiful shorting opportunity right there. Look at the market fall all the way back down. What happens there? The dollar starts to gain. Gains momentum, starts to push up. As soon as the dollar starts to rebound, the market gets slammed right back down. We come right into this key level, the master of the bottom of the Great Wall of China right here at 109.68, 109.70. You get a bounce, retrace, test it again, bounces again, test it here again, right at gap fill and that line. and bounces again. So you can see how this multiple color green white line, very key technical level, if we can get below that, you could actually start to see some good selling, folks. You could actually possibly come down into this range down here, which would be again a nice sell, but you have to cut through this 109.60 to 109.70 level. If you can get below there, close and confirm, you have a shot of actually, in my opinion, coming all the way back down here. Now the only caveat to this whole thing is that today is a holiday. All right, bond market is closed. When the cat's away, the mice will play, they say, and that holds true. When the bond market is closed, the market sometimes can play. So you really don't know, and you have to be a little on carefulness here, a little bit of safety note in regards to where this market could go this afternoon. They could push it back up. They could pull it back down. If volume gets lighter into the late session today, you have to give the market a neutral to upside bias. If it stays decent like this, you could continue to see selling. All right? Again, unbelievable Pierce. Look at this move today. Here's the Great Wall of China. You can see we got above it, and then look at that nice topping tail. There's a nice tail right there on the 60-minute chart, and look at the market come right back in all the way to the bottom of that Great Wall of China. Amazing stuff. Daily chart, even better, guys. I mean, that daily chart is just going to be great to go over tonight in the nightly video for our premium subscribers. We will cover everything that you need to know about that. We're going to give you the projections. Also, remember, the webinar is this Saturday, folks. This Saturday, it's a 5-hour course. We'll go 10 if you have to. If you have enough questions, we'll go as long as it takes. You want to stay until midnight that night, that is fine. Eastern time, whatever you want to do, okay? It is there. We're going to teach our methodology, teach our counts, teach everything you need to know to calculate targets, prices, cycles, you name it. It's going to be taken care of in that webinar. Go sign up at inthemoneystocks.com today. Don't be late, as it is filling up very fast. Only a few spots left, so you want to go. As long as you can go sign up, there's still a couple spots left, so go do it. Take care, well, folks. We'll talk to you all tomorrow. Enjoy this nice little pullback. Again, if you entered it with me, if you entered with the chat room, if you entered with those in the research center that did, you're in good shape right here on the short side of this market. Very nicely done. I will talk to you very soon tomorrow, or join to talk to me tonight. Take care.